Welcome back to Satoshi's Rush. My name is Tim, bringing you the truth about crypto and money. Today, I'm going to be starting a series answering all of the objections and arguments to Bitcoin as to why we shouldn't buy it, why we shouldn't own it, why it's a bad asset, why it's a bad investment. And the first part of the series is going to talk about the volatility that Bitcoin experiences. If we have a look at this little note here from a gentleman called Jamie Dimon, who runs one of the biggest banks in the world, JP Morgan. He says, I will personally never buy Bitcoin, and I do think that it is a risk if you are a buyer. When governments look at all this stuff, why do they put up with it? Bitcoin's price tag has indeed had a choppy history, to put it mildly. So Jamie there feels that Bitcoin's worthless and a waste of time. But then, interestingly, here he is uh, disclosing that his company at JP Morgan has purchased Bitcoin ETF holdings. So it all seems to me to be a big smoke screen. Now, we're going to talk about um, this volatility that Bitcoin experiences, and you're going to have heard it said Bitcoin's too volatile, makes it an unreliable store of value, doesn't make it a good medium of exchange. Large fluctuations in the price can deter both consumers and businesses from using it for any kind of transaction. To suggest that just because Bitcoin's price is highly volatile, well, that opens up some vulnerability to some of the other assets, because we're going to have a look at some of them, see how they perform, to see whether these statements are actually true. Um, and let's have a good look. We'll start with gold. Just gold versus the United States dollar here. On the weekly chart, you can see that in the last 12 months, we've had a 15% gain. Then we've had a 13% drop, 18% gain, 22% gain at the beginning of this year, and we've had a 6% drop. That's a significant drop. Even 6% is still a significant drop in the last month alone. Now, this is supposed to be from the number one inflation hedge in the world. Everyone's supposed to flock to gold if they want to protect their money. Been around for millennia. Supposed to be not volatile, but obviously the chart tells us something quite different, even just in the last 12 months alone. Bitcoin might have an excuse for at least being somewhat volatile over the last 15 years because it's a brand new asset. It's only just been invented. It's only 15 years old. It's still in its early days of adoption. It hasn't even gotten started yet. And obviously, I believe over time it will actually settle down because there's so few Bitcoin available. There's only 21 million Bitcoins available. Um, there, and a lot of people that buy the Bitcoins are buying them to hold them. And the more people that buy it, that understand it, that buy it and hold it, well, the less volatility that there's going to be in the market. A lot of this volatility comes from people trading it day in and day out, buying and selling it, day traders, stock traders. Um, and, you know, that does create some volatility. That's the way it is. It does not reflect anything negatively against the asset. Now, I do need to make it clear I'm not a financial advisor. Nothing on this channel is financial advice. You do your own research, it's your money. You get your own financial advice and you make the best decision that you think is possible for you. I'm here just to give you as much great investment advice, or at least educational investment advice, and then you decide as to whether or not you feel that it's right for you. I'm not telling you to buy or sell anything. I'm just giving you the raw information. Now, when we have a look at this as well, we've got companies, big companies, some of the biggest companies in the world, Tesla, Apple, Amazon. When they first launched their companies, they experienced extreme volatility in the early days. And in fact, even to this day now, they're still seeing some of that volatility in their price, even though they're much more mature companies. If we have a look at other precious metals, we've got silver here against the US dollar. Now, the silver price has obviously not performed very well over the last 15 or so years. If you had picked up silver in 2011, you would have dropped about just under half of your money. If you had been unfortunate enough to pick up silver in May 2011, and it's obviously experienced some significant volatility as well. Um, no different to Bitcoin, no different to gold. You'll see that it's a common thing throughout the precious metals market, even throughout the currency market. Platinum, another one, has experienced some significant ups and downs along the way. It's currently trading at 1,013. You look back here in 2008. If you had bought it in 2008, you wouldn't be happy because you would have been paying over $2,000 for it, and now you're only getting back 1,000. So you will have lost half of your money. The next one we would talk about, just for fun, we'll have a look at copper. If you had bought copper back here, you would have definitely made yourself a little bit of gain, protected yourself against some of the inflation of the US dollar, because you would have been purchasing it under $1, maybe at, under $1 here. But then you've seen some very significant volatility in copper as well, and it's currently trading at $4.78. So if you had bought it back 15 years ago, still the same price realistically. So not a great investment over the long term by the looks of it, and definitely a volatile investment at that. Now, rather than focusing on the volatility and worrying about whether price does move up and down quite significantly, and this is the other thing, I think a lot of people are of the opinion that they have to buy a full Bitcoin in order to get into the Bitcoin market, and that's not the case. If Bitcoin's $60,000, you're not putting 60,000. You don't have to put 60,000. You can put $5 in. You can put $10 in. Whatever you can afford to lose. Like with any investment, you assess the risk. You work out how much you're prepared to actually risk. Like with any investment, you can always risk losing. It's just the reality of life. There's no such thing as a perfect, foolproof investment that will never, never, never lose money. I mean, it's not the way it works. But I think a lot of people have a bad perception about the Bitcoin price volatility because, it was $60,000 and then it fell down to $20,000. I would have lost 40,000. I can't afford to lose 40,000. But if you had bought $100 worth at $60,000 and then it fell down to $20,000, what have you gone down to? $40. You haven't lost all of your money. And where it's sitting at the moment now, it's come back and you're back up above that. So it's obviously still in its early days. No one would have ever lost all of their money, I don't believe, through the entire history of Bitcoin from the price action. The only way that people have lost their money over time has been because they've been careless with their security. They've let someone run off with their seed phrase in their hardware wallet, or they've you know thrown their seed phrase in the bin and forgotten their codes. Well, that's not Bitcoin's fault. That's our fault for not being careful. Now, the other one I was going to say is with volatility, if rather than focusing on the volatility, why don't we check asset for asset, check the strength of an asset versus another asset using the charts, because the charts don't lie. It records price action every single day. This chart here is gold versus Bitcoin. We've got a gold versus Bitcoin chart here. What's happened? Gold was way up here somewhere back in the old days, back in 2010. You could buy 130,000 Bitcoin with 1 ounce of gold back in 2010. Now you can buy 0.03 Bitcoin with 1 ounce of gold. So gold has flatlined. There's no strength in gold when it is compared to Bitcoin. So Bitcoin wins by strength. If we go and have a look at silver, what's happened to silver? Exactly the same as gold. Back here, you were buying tons of Bitcoins with 1 ounce of silver. Now you're getting 0.00046 ounces Bitcoins, 0.00046 Bitcoins for 1 ounce of silver, right? So silver has flatlined, and bang, silver is a loser against Bitcoin as well. Yeah, look, even the volatility, it's still there. What about if we had a look at some of the bigger currencies? Why don't we look at the euro and see what's happened with the euro? Well, back here in 2015, Bitcoin was cheap in euros, but now it went up you paid 51,000 euros, 50,000 euros back in 2021. Now, what are you buying? 57,000 euros it costs you to buy one Bitcoin. So the Bitcoin has gained strength against the euro. The euro has lost strength. If we go and have a look at the Swiss franc, the reason I've used the Swiss franc is because the Swiss franc is considered the ultimate currency, the strongest, safest currency that we have in the entire world. Yet, Bitcoin has strengthened against the Swiss franc as well. Bitcoin beats the Swiss franc. Down here, when the chart started, at least back in December 2019, it cost you 5,288 Swiss francs. Now it's costing you 56,243 Swiss francs to buy a Bitcoin. Bitcoin clearly wins again. Okay. What about if we just looked at some of the stocks? Apple, Tesla, Netflix. There is one that actually beat Bitcoin in the last 10 years. Let's have a look. I wonder if you know which one it was. Apple has won. Apple has 886% gain in 10 years. That's an impressive gain. 886% is better than having your money sitting in US dollars, losing money, being devalued. That's a great return. But Bitcoin returned just under 14,000. We go and have a look at Tesla. Tesla got 1,245% over 10 years. Even better return. Tesla's done really well. Had a little bit of a pullback here. It has had a little bit of a pullback on the downtrend in the last couple of years, not doing as well as it was, but it's still had an excellent return. Bitcoin still killed it by more than 10 times. If you look at Netflix, Netflix has had a 21% return, still better than holding your money in dollars. Bitcoin's still blown it out of the park. The winner is Nvidia. In 10 years, Nvidia's actually had a higher return than Bitcoin. Does that mean that Nvidia is better or has won? Well, in a 10-year period, you could say that it has. But if we went back one more year to 2013, which I can't pull up on this chart, this 13,000% return would be 129,000. I thought a 10-year chart would be a little bit more realistic rather than going for a 15-year chart. If we go right back to 2009, Bitcoin's gains are something like 6 million%. So Bitcoin would definitely beat Nvidia if we just looked at it for 1 year earlier in 2013. It had 129,000% return, but still Nvidia's done very well. Nvidia's in the gaming space, the AI space. They do graphics cards. There's huge demand for those. If you know anything a lot about Bitcoin mining, they'll be getting a lot of their revenue from that as well. So Nvidia has performed extremely well. But I think it's pretty clear here that you're not going to find any other asset or currency that's going to continuously perform better than Bitcoin, right, since it was created 15 years ago. And even if you could, you most certainly wouldn't find any other asset that has the duality of being both a store of value and a real world liquid currency, medium of exchange. Okay, that's where we're sitting with the volatility. I believe that when you hear this out there in the marketplace in the news, that it's people just trying to deter you and keep you out of it. They don't want you to buy Bitcoin because they want you in the dollar. They want you in the current system. They can control you with the dollar. If you start moving and we all start moving into Bitcoin, they can't control the people anymore. They just can't. Everything's going to collapse around them and they're panicking. They are hating it. They want to stop it. They're doing everything they possibly can. This is why my friend JP Morgan boss, Jamie Dimon, is telling you that he would never buy it because he thinks that, we should listen to him because he's the boss of JP Morgan. But then what does he do? Discloses because they have to disclose. If they didn't have to disclose, he wouldn't disclose it. They have to disclose that they bought the ETFs. Okay, so thanks very much for watching, guys. If you find this content valuable, please just take a moment to hit the like button, subscribe to the channel, leave a comment in the box if you have something to say, if you've got any questions. I'd love your feedback. The next episode we do, I'm going to be talking about scalability. There's a big argument that Bitcoin can't be scaled. It's an old tech. It's too slow. It's never going to work. Well, let's have a look at that and we'll see how we go with it. Thanks again for watching. We'll see you next time.